I get a lot of questions in my day-to-day life now that I'm so obsessed with gold about why I'm so into gold. And I thought I'd make a video explaining that. Um, so in our day-to-day lives, what we think of as money is paper that we're legally required to use for commerce, especially when it comes to paying taxes or any vendor across the country or really across the globe is not going to take gold from you. They're going to take US dollars, Swiss francs, all the various fiat currencies depending on the country you're in. They've really gotten people to forget about gold. Um, if you read throughout history, I'd say the Jewish people know the most about gold. You'll see a lot of people stereotypically Jewish will have gold in their names. And the reason for that is because throughout history, various governments, especially, Russia, I'm sure there's a few others, Russia's the first to come to mind, where gold was a way to save your purchasing power and all your life's work from theft of governments because governments throughout history have always tried to use these fiat currencies, which governments are all using today, and they're backed by nothing except by confidence. What gives the value to the dollar is the effort people have to go through in order to obtain those dollars. So the dollars are effectively backed by the labor it takes to obtain them. Unfortunately, we live in an environment where very little of our commerce is done through the private sector. We have, I would actually be very interested in seeing statistics if they were available about, if you go to go to the nearest, burger joint near you, and what percentage of the money spent there comes from the private sector. I would be willing to bet that every year that passes, less and less. Um, so, and money that comes from the public sector normally would not devalue the dollar. But what's happening is, and I'm sure you're aware of this, is our national deficits. So not everything that our government finances and spends money on was there actually, people weren't taxed. And even though I'm against taxation, the method in which you're supposed to finance a government is various forms of taxation. Unfortunately, for various things, that the country may want to do, people aren't going to, in their right mind, vote for it, such as war. People are not going to vote for war. If they have a sane, rational mind, if they haven't been indoctrinated into thinking that, war is just inevitable and that it's a necessary evil, that's not true. That's what we're all being bred to believe, but nobody likes war, and even in, say, Vietnam, I mean, we were sending over people to kill innocent civilians, and these people were just trying to defend their country. I mean, they just happened to be born there. So wars, for the most part, are people being pitted against each other over geographical coincidences, not so much ideologues. It's usually people in power sending usually it's old men with money, sending young men who, are in financial straits and most likely join the military because that was their main economic way out. They're sending those boys over to die. And these wars would never be financeable if we were using gold as a currency for our nations. So I'm very passionate about it because, the century of central banking is the century of war. The Federal Reserve was made in 1913, and give it a few years, a world war starts. Give it a few years after that, our currency's already lost 20-30% of its purchasing power by 1922. So there's no coincidence that inflation and wars follow directly following central banking. Of course, back then, our money was still backed by gold, at least partially. And that creates complexities that we'll go into in later videos, I'm sure, because a lot of these problems, like constraints on the money supply, etc., were used to blame or they blame the Great Depression on our currency being backed by gold because it constrained the Federal Reserve's ability to increase money supply throughout the country. But of course, we're going to go into that later about why that's not true, by why it's more complicated than that. But so I wanted to go into the positives and negatives to owning gold. I guess it's 5 minutes in, and I'm just now getting to it, but whatever. So gold is a periodic element on the. I'm sure in science class in middle school or high school, you saw the periodic table, even in college, and a lot of people don't realize that gold, AU, this is a symbol, is on the periodic table, which means you can't just print it. This is not paper. It's not you just can't just frit it away. It's something tangible that needs to be mined out of the ground with somebody's labor. And and so if our money was gold and our government wanted to finance a war, it would have to get willing taxpayers to pay for the taxes. But we'll go into that later. But because our money is paper, they can just print it, um, taking away the purchasing power of hardworking savers and transferring it to whatever means they decide it should go to. Whether it's Iraq, Vietnam, even if it's domestic spending here on welfare, infrastructure, various things. They decide completely. It's this is you know they pretty much, the government has an unlimited budget. They'll send us into as much debt as they feel like because our currency is backed by nothing. Um, it's the only asset that is gold. Gold is the only asset that is also not simultaneously someone else's liability. So what that means is, say you're holding cash. It's somebody, you are liable for the decisions and the financial effects of those decisions across the world holding dollars. That might sound a little confusing, but an example is, say you're holding $200,000 in cash in your bank account, and the government, they can't increase people's taxes. We're already one of the most taxed countries in the world, and people, you can't get blood out of a turnip. People don't have the financial resources to tax anymore. They don't have the predicted productivity we used to. So, what they're going to do is they're going to inflate the currency away in order to finance various parts of the government they feel like. Uh, Mostly with debt, but all of it's with worthless fiat currency. And the same currency that people in the private sector are going to hard work every day to, they're competing in a not really free market, but they're competing and working their butts off, getting up early in the morning, and sacrificing and using their skill sets and earning to converting their labor into a wage, to money. And that same money is printed by the billions every day, decreasing its purchasing power. But if people were earning gold as wage, it would be locked in. It would represent that person's labor through. If your savings were in gold, it would represent your hard work and labor throughout your lifetime, and no one's going to be able to take it from you. Sure, new gold mines are discovered every now and then, and more gold is mined out of the earth, but usually the increase in gold supply globally is no greater than population growth. The amount of gold supply in the world can never, ever, ever come close to how much our money supplies are being increased in the modern world. Um, if you were born around when I was in 1988, you'll remember throughout the 90s growing up, a $20 bill bought a lot of stuff. It you know you could probably buy a week's worth of groceries, almost, or not quite, but you know what I mean. Like, you could, at least with two 20s, you could buy a week's worth of groceries. Now go to Costco. You're blowing hundreds like you used to blow 20s. A lot of this is because of our monetary system, and a lot of, say you had 500 grand saved up, working hard your whole life back in 1999. If you didn't invest in gold, if you didn't invest in real estate, of course, even the simple-minded, the banks are going to be calling you up, hey, you idiot, you have all this cash, buy some real estate. In which case, you would have still been better off. But even still, there's people with certain mindsets, especially in the Japanese culture, where they don't just pointlessly take risks. They very much, They understand the value of saving, because you never know when, and normally in a normal world, saving is the responsible thing to do. Unfortunately, we're living in a financial system which incentivizes speculation and incentivizes um, participating in bubbles, because you feel like a fool if you don't. And there's not really any true economic growth. And usually these people end up losing everything, because how do you know exactly when to sell, for eggs? So anyway, I'm going off on tangents, but because of central banking, the prices of various things throughout history and various sectors have been manipulated beyond what the free market would do otherwise. An example is the cost of medical care in college today. If the government did not guarantee these loans, the prices would never be as high as they were, because they would never have the amount of customers they have. If the government was not guaranteeing these student loans, the amount of people going to college would be like half, which is a good thing. Most of these people should not be going to college. And that price would be way lower, because most of the reason why the price is so high is because if you default on your loan, the government is responsible for it. No single individual. There's no private investor, entrepreneur on the hook if you default on your student loans. So we're kind of going off on tangents, but that's why you don't want to hold cash. So that's just one example of why other assets are liabilities. Other assets is more obvious. If you hold stocks, I mean, there's immense risk in that. If you hold real estate, people who bought in 2006, they know that there's risk in that. So you know that those assets are also other people's liabilities, and there's risk to it. And as we'll go into later, there's not really any risk to owning gold. People will say like, oh, I bought gold at 1900 in 2011, and now it's 1200, 1250. If I had put that money in the stock market instead, I would be up, double my money, triple my money, instead of down, 40%, 30%. And it's so interesting that people bring up those exact worst case scenarios, because where were these people in 2000 to 2007 when gold was rising from 250 to 900 or whatever? Where were these people? So anyway, another tangent, but so people's fascination with gold isn't just because it's shiny. So many people will say like, oh, it's just a shiny rock. Well, people are fascinated with it because they know deep down in their gut that it is money. I mean, look at the Egyptians. If you found King Tut's mask, underneath the ground, like you know that's valuable. Like you just do. You didn't need some government to tell you it. But a lot of us have been, taught to forget about gold, because they don't want people being independent of this monetary system. Another positive to gold too is that your whole life savings can be carried on your back. Like say you're like, your net worth is like $200,000. You could liquidate everything, buy a gold bar for that, and I'm not saying this is a good idea. I'm just saying that this is theoretically possible. You buy the gold and you can carry it around on your back, like, you could just go anywhere. You can't do that with your house. You can't do that with your bank account. You can't do that with. So you can store a large amount of wealth in a very small space, and this has been very useful to people throughout the years who are distrusting of governments, especially again, I mentioned the Jewish people. A lot of them have gold in their last names because that knowledge is passed down from generation to generation. Hey, we were persecuted by people and governments in the past, and we were able to preserve our wealth, which we worked hard for, which people were jealous of, using gold, and hiding it in the basement, or, hiding it in the ground or something. So later on, I'm going to talk about some of the negatives of gold, but those negatives are the price you pay to being independent of governments. There's a lot of conveniences to modern currencies. How you can just, if you want to pay someone in Japan, just like that, you can. You don't need to, try sending gold to someone in Japan. So right now, that's the only negative. And there's solutions being worked out with that. But so yeah, if there was some drastic, horrible situation, if you could convert your life savings to gold and just move it, walk it around. You know, if someone, if you had ancestors in, you know, the 1920s or something that liquidated their, you know, some assets and bought a gold bar and buried it in the ground, and you dug it up today, it would have the same purchasing power that it did when they put it in. You're not going to be able to say that with a briefcase of cash. Sorry, but you know, if you're planning to leave something for your, you know, for your kids and your grandkids, don't leave them a briefcase of cash because that's just going to be worthless paper soon enough. So another reason to want gold is that the government, and you can look at this right now, go in the U.S. debt clock, and you will find that the government has promised 100 trillion in unfunded liabilities. Now, there can be two possible scenarios to this. One, the government defaults on their obligations, which I don't think will happen. That will cause mass riots, mass panics. Imagine if food stamps, you know, just stopped working right now. I mean, and it could be worse than that, you know, when it comes to national debt. I mean, if the government's not able to finance itself, how are you going to pay the military? How are you going to pay the police? How are you going to pay the post office? How are you going to pay the government? How are you going to pay anybody? You know, and you know, police aren't, most police, you know, I hate to break it to you, but they wouldn't be doing what they're doing if they weren't getting paid. So same with the military. So you take those paychecks away, it could be very bad. So I don't think the government's going to default on their obligations, you know, the promises that they've made. I think that they're going to keep those promises, and keeping those promises involves shelling out. You know, they're going to mail out in the form of paychecks, in the form of dollars to U.S. citizens, and you know, through various forms, 100 trillion between Medicare, Social Security, Medicaid, like all the various promises, you know, military, whatever it might be, infrastructure. You know, that's going to cost the government. I'm not really sure what the time frame they're looking at, you know, but over the next few decades, 60 years, whatever it is, they're expecting 100 trillion in unfunded liabilities. The growth is not what it's going to be back in the last century, and that's what all of this has been based off of, is infinite growth. You know, they say, well, if GDP just keeps rising 5% every year for 50 years, we'll be able to pay this. But unfortunately, between, you know, this whole central banking fiasco kind of coming to a head, as well as demographic shifts and other various things, and, you know, socio-political problems, that growth is just not going to happen. It's not, you know, and these promises will be mailed out to their recipients, and they will spend it because they need it. And when they spend it, it's going to increase money velocity. It's going to there's going to be more money chasing less goods. Inflation pretty much guaranteed. I mean, how many people out there are really producing, and how many people out there are really going to be producing in 5-10 years versus just consuming? And you know that those goods have to be produced by somebody. And another positive of gold is you have to look at the worst case scenario. You know, the worst case scenario is not that good or not that bad. You know, a lot of people's worst case scenario in the past was they bought at 1900, you know, in the middle of 2011, and now their gold is worth like 1250. But you know, a lot of these people, they were buying gold for the wrong reasons. You know, if you know, I know a lot of people, you know, in my personal life that, you know, 2010, 2011, you look at a gold chart, that thing's just flying, kind of like the Dow Jones today. You know, that thing was just flying. You know, everyone wanted to get on the gravy train. But where were they in 2000, in 2003, 2004, 2005, 2006, 2007? Where were they? Just, why are they waiting until 2011? You know, when everything, including the best assets in the world, do not go up forever. You know, everything goes down at some point. And I, you know, as much of a gold bull as I am, it was entering bubble territory at the time, you know, because everyone was chasing the best game in town, and the financial crisis just happened, and people didn't know what the Federal Reserve was going to do in terms of tightening, blah blah blah, you know. So you know, people didn't know that the deflationary environment of the last 5 years was going to come into play. But really, it's just created a new buying opportunity for those that, you know, didn't get in so far this century. You know, A lot of people don't realize that gold has outperformed the stock markets and the stock market indexes by far this century, by far. But the talking heads aren't talking about it. You know, they want you, you know, want you buying GE stock, you know, they want you buying Facebook stock and Amazon stock at all-time highs. You know, you better hope that you sell before it crashes. You know, like just like everyone in the dot-com bubble in 99, you know. How many people sold before the crash? And how many people were really rich on paper? You know, but if you never sold, it was just numbers on a computer. You just felt rich. You weren't really rich. So you have to be really careful about that. Now to the negatives of gold. You know, I already went through taking, you know, I know I'm going off all on tangents, but whatever. So now to the negatives of gold. And you know, I really wish that, you know, I mean, when I was first getting into gold, you know, you'll find a lot of people on the internet that are very bullish on gold. You'll also find people that are anti-gold. But and the people who are bullish for gold, at least for the first few months I was studying it, you didn't really find any of them too much acknowledging the negatives. A lot of them are selling gold. A lot of them are selling books related on gold. A lot of them, you know, the emotion of greed is in everybody, even no matter what the sector is, and so they're trying to invoke the you know the greed emotion in you, hoping you'll get rich overnight buying precious metals and blah blah blah. And you really won't. You know, the precious metals for the most part are a long-term investment. You know, it's more a true savings account is how you should see your precious metals because it's what you're saving. It's what you're choosing. It's your capital you're choosing to not take a risk with really, and it's not giving you a yield. You know, it's not giving you a yield. So that's the main first negative is there's no yield to gold. One of the most you know one of the most useful things you can do with your capital is invest it somewhere which can give you a yield because you know, that should be obvious. But you know, basically, you know, you want your capital working for you so that you don't need necessarily to be using your labor, even though you probably will be. In addition to it, you want to be diversified. You know, I mean, if you have, you know, a piece of capital, you know, well, most commonly a rental property, and you're renting it out, and you have a tenant, and it's generating cash flow, that gives you independence from your employer. It gives you overall financial leverage, and it's just a good thing to have. So yeah, I mean, if you have, you know, $1 million in gold just sitting somewhere, it's not doing anything for you. You know, it's not going to grow. It's not going to compound. Your purchasing power is probably it might go up, you know, because everyone in the world losing purchasing power in their fiat currency, it's being transferred to you through inflation. But really, you could probably be making more money if that capital was in a yield generating asset that was also hedged against inflation. So one of the negatives of gold is that that capital could be somewhere else generating a yield. You know, you got 200 grand in gold, well, liquidate it, buy a piece of real estate and rent it out, and now it's generating cash flow. Now, the reason you shouldn't necessarily do that quick, now that's just an example, is because now you're giving up, you're gaining a yield, but you're also gaining a risk. What if the real estate market, you know, what if the real estate prices fall out underneath? You know, what if people in that area, you know, what if the main employer in that area goes out of business? You know, what if your, you know, your tenant for whatever reason, you know, can't pay their bills and you can't find a new one? You know, there's costs of home ownership. There's all sorts of, you know, there's property taxes. There's a lot of negatives, you know, that, but those are prices you pay in hopes of a yield. And, you know, yield is the name of the game pretty much in terms of wealth generation, but you're not, but there's times when you feel that the assets that can generate you a yield are overvalued. Um, that's the case with many assets today. There's times when you're not looking for a risk. There's times, especially for older people, where you do not want risk. You know, you can't afford the risk of dropping a few hundred grand on a rental property and having to maintain it and worry about tenants and all that stuff. Like, even though even though being a landowner, relatively speaking, is not, you know, you shouldn't, most people aren't complaining about being landowners. That is what I'm saying. There's still work involved that some people, or risk involved that some people might not necessarily want to take on. So, um, so another negative to gold is that if we were to go back to a gold standard, it would require extensive technical work in terms of currency valuations, the parities to each other. Just it would be very, very complicated, and it would be a painful transition. But I feel like it would be necessary in terms of long-term prosperity and the preservation of our standard of living. It's kind of like quitting a drug habit. It's going to be very painful, but I feel like it has to be done. Um, for the long term good. The reason we've had this charade go on so long is because the politicians are kicking the can down the tunnel, afraid to face the wrath of us kicking the can down the tunnel for decades now. So, another negative to gold is that you can't easily transact over distance. I might have already mentioned this, but it's a negative. If you have a relative overseas that needs help or needs money right now, or if you want to give them a gift or whatever the reason might be, you know um, it's a lot harder to send them gold than it is to wire them money. Especially nowadays. You could probably send someone money with your phone. And that's a huge advantage to the modern day digital currencies. And of course, Bitcoin's another topic. I'm not huge on Bitcoin, but I'm a bigger fan of it than the U.S. dollar. But at least one of the positives to Bitcoin over gold is that it has that power of a digital currency in which you can transfer it to someone across the world in a matter of seconds, and you're not going to be able to do that with gold. So that's a negative of gold that we need to acknowledge. Fortunately, you're not going to, I don't feel you'll need to be making transactions with your gold much because, it's your savings, so hope you should be keeping enough cash on hand for your bills, etc., for the near term. So you generally, if precious metals are your savings account, you don't want to be having to dip into your savings account unnecessarily too often. If you are, that's kind of bad. But if you have to, you have to. That's what the savings account's there for. I mean, what's the point of money if you can't spend it, right? So it's there. So you can liquidate it and you can sell it. It's just going to take some time, and there's risk. What if it gets lost or stolen? So that's my next negative: is gold can be lost or stolen. I mean, if you lose your credit card, it can be frozen right away, and all the fraudulent charges will probably be reversed, and you'll be refunded all the damage that was done to you. In gold, that's not going to happen. And in fact, that's how the first bankers came to exist. Was people paid fees for someone to protect their gold, and that was the first banker. And that's where a lot of the names Goldsmith came from. And these were the first goldsmiths, became the first bankers, and because people in their own private residences, back in 1600s, 1700s, 1800s, before that, before so much of the modern day, you know, your home could just be raided, especially like in Europe. There was a lot of political and geopolitical instability in Europe, and there still is, frankly. I mean, that continent is just littered with war in its history. And, country borders shift, currencies change. That's the biggest one, is currencies have just been changing all the time in Europe throughout the last hundreds of years. And if you're owning gold, it doesn't matter. If you're owning gold, you can sell it for whatever currency that you need to pay your bills at the given time. If you have like family heirlooms in the form of gold, if you have a private stash in the form of gold, in 100 years, whatever country your descendants happen to be living in can sell that gold for whatever bullshit currency their government of the day is using, and live off it, and they'll be fine. So, and another negative to it is potential taxes, and you're gonna have to look up in your state what the taxes are. I know for me in the state of California, I believe as long as you spend at least 1,500, there's no sales tax. So you're gonna have to look it up in your state. But the for the most part, there is going to be taxes to it because when you're buying gold, what you're saying to the world and to the government is, I don't trust your money, and I'm you're basically creating your own gold backed central bank. You're becoming your own central bank, and they don't want you to do that. So, you know, there is a general rule of thumb: if you want less of something, tax it. And they want less people buying gold, so there's taxes on it, and that's just something you got to deal with. And in the state of California where I am, I just make sure I'm spending 1,500, and I'm not wasting money. And so yeah, another negative I was going to go over was buying high, selling low. People make this mistake with everything, but it's so painful to see it. It's so painful. Like, the most common example is you hear about people buying gold in 2011 when it was like 1,800, 1,900, and it crashes. It crashes down to like 1,400. They panic and sell and say, "Oh, this was a worthless piece of metal that I was conned into buying, and it was a bubble and all this stuff." And like it's still doing extremely well performance wise for this century. I mean, think about it. At the turn of the century, it was like $280 an ounce. So you're still, if you bought in 2000, you're still, triple, quadrupling, your money. And so I think that's about all I have in terms of the positives and negatives to gold. Something that you can check out too if you want more. And my favorite book on the matter was the new. This is probably backwards for you guys, but it's called The New Case for Gold by James Rickards, and he just goes over it. He has other books where he's much more technical, and if you're not a financial expert, it's a lot harder to follow. But in this specific book, it's very readable. Even if you're new to finance. And if you're skeptical about it, you want more information about it, check out his book. I wish I was getting paid to promote that, but I'm not. So, The New Case for Gold by James Rickards was a great read that really informed me a lot about gold and people's criticisms of it, and just things you should know about it. All right, so that's positives and negatives to gold, and hope you enjoyed it.